It's 2:17 in the morning. 5% of the futures are falling. Regional banks are collapsing and billions of dollars are losing every hour. In Washington, the Treasury is running through scenarios of $100 billion running out. And this leads to a systemic failure. So they make a call, not to a politician, not to the Federal Reserve. They call the CEO of the largest bank in America, Jamie Dimon.
Jamie Dimon.
Jamie Dimon.
Jamie Dimon. Jamie Dimon.
Jamie Dimon.
Jamie Dimon.
This story uncovers the survival architecture of Jamie Dimon and JPMorgan Chase. Back in 1907, the United States didn't have a Federal Reserve. So when the banking system collapsed into a panic, there was no government to save it. It was just one banker, Pierpont Morgan. At one point during the crisis, Morgan personally intervened and reviewed every bank's balance sheets by a candlelight and decided which bank would fail and which would survive it. One single crisis directly led to the creation of Federal Reserve in 1913. The Morgan name became synonymous to financial stability, and by the 2000s, institution which carried Morgan's name already had survived the Great Depression, 2 world wars, the 1917 inflation crisis, 1987 market crash, the dot-com collapse. Now let's see how this legacy is being carried forward today. Jamie Dimon did not rise quietly through the corporate banking. He was trained by Wall Street's one of the most aggressive deal makers, Sandy Well. In 1990s, Dimon had built a financial empire later to be known as Citigroup. But in 1998, after a power struggle at Citigroup, Dimon was suddenly out. At 42 years old, he was effectively fired from the center of the Wall Street. Later, he rebuilt his career at a smaller institution, Bank One. When JP Morgan acquired Bank One in 2004, Jamie Dimon inherited something far more valuable than scale. He inherited control. Today, JP Morgan operates with a common equity tier 1 ratio of almost 13 to 14%, applied to over $3.9 trillion worth of assets, and that equals to around $300 billion in core equity. Equity absorbs losses, but liquidity absorbs panic. JP Morgan holds over $1 trillion in high-quality liquid assets. These are mostly US Treasuries, central bank reserves, and overnight cash instruments. In severe stress scenarios, the bank can cover up to an year worth of projected cash outflows without any external funding. That's not efficiency. That's a survival architecture. JP Morgan employs more than 50,000 people in risk, compliance, audit, and control. That number is larger than total workforce of many banks. Every quarter, the firm runs with thousands of stress simulations, including situations where US employment exceeds 10%, equity markets fall 35% or more, corporate defaults double or triple, commercial real estate drops 25 to 40%. And this is why risk is not just a department at JP Morgan. It is their core infrastructure. In 2023, JP Morgan generated over $158 billion in revenue. But the structure matters more than the total. Consumer and community banking, $74 billion. Corporate and investment banking, $63 billion. And asset and wealth management, over $22 billion. And then there's payments. JP Morgan processes over $10 trillion of payments every single day. When market freezes, payments are still moving. The salaries are still clear and companies can settle transactions. This constant transactional flow creates revenue that doesn't disappear in a crash. This bank holds over $2.4 trillion in deposits. This spreads across 80 plus million consumers, millions of small businesses, and tens of thousands of corporations. In March 2008, Bear Stearns shares transacted about $170. But days later, JP Morgan acquired it for about $10 per share. 6 months later, it acquired Washington Mutual, a bank that holds $300 billion in cash and over 2,200 branches. This tells us that JP Morgan didn't expand it because it wanted to. It expanded because it could. When COVID shut down the whole economy, JP Morgan built over $34 billion in credit reserves. At the same time, it processed funds for corporate banking and government-lent banking. In 2023, the system trembled again. JP Morgan acquired the First Republic Bank. This deal added roughly $200 billion in assets and roughly $90 billion in deposits. Once again, the system turned into a strongest balance sheet in the room. Today, JP Morgan stands as the largest bank in America with over $3.9 trillion in assets, around $158 billion in revenue, and around $49 billion in net income, and a whopping market cap of $500 billion. More than 300,000 employees worldwide. This number is not just a statistical figure, it is an operational figure. In every major global financial shock over the last 2 decades, JP Morgan never stopped functioning. In a financial world built on leverage, Jamie Dimon built something rarer, a bank which prepares for the moment when leverage breaks. And in banking, the institution which survives the storm doesn't just live, it becomes the system. This was a story of JP Morgan Chase and Jamie Dimon. If you enjoyed this video, please like, share, and subscribe this channel for more such case study. See you in the next one.